So thank you for joining us today on this webinar. This is about the monthly recap of the August trade results for the Boomerang Day Trader using the new dynamic trend bands to set up the trades. I'm going to go over in details with you of that. First of all, I want to say that we have our risk disclosure here, which we discussed, and you should all be well aware of this. Let me bring up the NASDAQ chart now. We use NASDAQ, and I want to explain the reason for that. The primary reason that we use NASDAQ is that it is much smoother contact to trade, and it's also moves at $5 per tick. So what's great about that is if you're new at trading, or you just want to buy Boomerang and test out our system live, you can use one contract. It's only moving at $5 a tick, and you should not have a problem with trading, letting the market, even if it ran against you, you're not going to have show large losses unless you did something completely crazy. Well, we show you how to prevent losses by using a regular stop loss limit and by using the specific gain and stop loss on the chart. In other words, I'll show you that real briefly. On Ninja and Boomerang, you click on this here. Let's see, get this going here. And this shows right here, for example, this is a sim account here, and this shows the buy, sell, reverse, and close tickets here, where you can just get in the market out. You can set the contracts, like here I've preset plus 5 ticks, minus 10 ticks, plus 8 ticks, minus 12. The method I'm going to show you today calls for plus 12 ticks, and we're going to also use a minus 10 tick stop. Now, I'm not going to set this here, but I just want to show you that those can all be preset. So here's what we're going to do today. Now, this can be a little bit informal because I just want to go over with you exactly how what I showed you in the advertisement. I want to show you exactly what I was referring to. Now, we're going to be going back to the date will be 7/29, which is shown, let's see here. It's starting 7/29 and running through 8/3. Now, during that period, there were 173 trades within the exact setups that I'm going to show you. 141 of those were winners, which is an 81.50% winning ratio. 32 were losses for 18.5%. The average amount of trades was about 5 to 7, maybe 8 trades per session. So it's very, you're not constantly in and out of the market, just a regular, you're talking about during the entire session. I'm going to go over, and this is based on the entire session from the New York Stock Exchange opening to closing times. And the point is that it's only about be about 1 or 2 trades an hour during some periods, and some periods just 1 trade. So it's not like you're really active and going crazy trading all over the place. So with that kind of return, based on 4 contracts of NASDAQ moving at $5 a tick, that's $80 per point on 4 contracts, per 1 contract, and times 4 is 240. So every time we make 3 points, that's 3 times $80 per point. That's $240. And every time there is a loss with a 2.50 loss, that is 4 contracts times 20. That's $200 loss per trade. You see? The way it becomes a very valuable system is when you have a 60% or higher win ratio over losses in any trading system going back. So with this one, the trading gain is very high, so the results can be astounding. Now, if you do the math on 173 total trades, that's 692 round turns times an average of $3.75 per contract. That totals $2,595 over that 1 month of commissions. However, the gains on 141 gain trades at $240 per trade is $33,840. 32 loss trades at $200 is $6,400. So if you're doing the math, taking the notes here, You've got $3,300, $33,840 minus $6,400 in losses, and minus $25.95 for the commission based on a 3.75, $3.75 per round turn. The grand total, after doing the math on that, is $24,845. Now again, I'm going to be disclaiming this all through the system because I'm going to be doing this every month and recapping this for you. These are not live trades, but these are the exact setups that occurred during that period. I'm going to spend the next 45 minutes going over all of the trades. It might even get a little bit boring, but if you're highly interested in making a career in trading, and you can go in with a small account of $5,000 or so, which will easily margin 4 NASDAQ contracts, and turn that into, a 400%, 500% return on that margin every month, not only is that a tremendous gain, but it's a career trading position. You're making what a top executive who has to put on a suit and drive to an office every day and deal with all kinds of office politics and has to set goals and become a real winner in that company to make, for them to pay him $25,000 a month. You can imagine, well, you get to stay at home with your family or just in your comfort zone there, trade these markets in a systematic way, making 5 to 8 trades a day and produce these potential same results as you get good at it. Okay, so let's get started. Now I've got a crosshair on here. What I'm going to do just to show you initially, I'm going to take the crosshair off. The way you go that is you right click on the chart, go to cursor, and we're just going to go to pointer. So before we get started, I just want to show you one thing real quick. Boomerang Day Trader consists of these trade channels here, which are these shaded areas. Buy and sell. Buy is a dark green, sell is a darkish red. It consists of that, and it consists of this red. This is the trade channel. You have the white line, which is the rim, the fast line of the rim of the trade channel, and the red line. It's very simple. In the middle of that is this small dashed line right here. You can see it better here too, which is the trade signal line that I developed, which alerts us to entries on pullbacks to the signal line. It'll give 6 entry alarms, and then it stops at that point. Now, that's just to invite us to get in to those things. But you can get in, for example, here on a trade entry down here, possibly right there. I'll show you more about this later, but the idea is following the exact system. You get in under very specific rules, and those rules are very simple. But before I show you that, now down here, by the way, these are the bias indicators, and we're not going to be focusing much on these. This is the hyper scalp down here, just showing the basic bias mode here. And then you have the bias index number 2 and bias index number 1. But right now, you're not even going to have to be concerned about those to trade. I have made Boomerang Day Trader now so simple using our dynamic trend bands that these are only something you can monitor visually and make sure that you're staying on the right side of the market when you're in the trade. Okay, having said that, and now that you understand, I'm going to go through the whole month very quickly, just showing you what happens when the white line, this rim of the trade channel, crosses over the dynamic trend band, and the dynamic trend band number 1, this is number 2, number 1 has the same matching color of the trade channel on the side we want to be on. You with me? Now again, we're looking for a 3-point move to accomplish those results that I told you about in the promotion I sent, and we're looking for a 2.5-point loss. So now, real quickly, let me just go through this. White line crossing the dynamic trend band with this matching. There's a winning trade there. See that? No white line crossing here. Here's a second level trade here. White line crossing here, matching. There's a winning trade there. Pullback that doesn't cross over. Here's a second level trade here. Here's a white line crossing here, pullback signal line, and here's a winning trade here, and here's a second level trade here. You see that? Now these are West Coast charts, so the opening of the New York Stock Exchange would be shown as 6:30 a.m. on these charts, and the closing time is 1:15. winning trade here, crossing over, white line crosses over. See that? Crossing over here. Some of them will get stopped out. This one would have gotten stopped out, but according to our rules, and I'll go over that in a minute, you would not have taken a short trade here on this fat, what's called a fat channel. Here's a winning trade here, picks it right up. Here's a winning trade here. See the white line crossing the dynamic trend band with the matching up here. And there's a few more rules that we're going to really refine that trade to make sure we get the best winners possible. Here's a winner here. Here's a second level winner. Winning trade here. Pullback, no crossover. Second level winner here. Coming into the final 10 minutes of closing, you're normally not going to take those trades. Here's the next day, winner here, white line crossing over here. There's a winning trade here, but this is a little bit of a fat channel, one of our rules, and I'll go over that in a second as we go through each trade. Again, this can be a scholarly kind of study. I'm going to do these every month, recap of the whole session. But I'm just trying to give you an idea how this works. Here's where you would have gotten stopped out. You might have been able to recognize this was a choppy market and not taken this trade. Otherwise, got stopped out. Here you pick the gain right back again. Maybe stopped out again here. It's one of these creepy 11:30 Eastern Standard Time market. This is where Europe is bowing out of the market at that point. So very frequently at around 8:30, which is 11:30 Eastern Standard Time, the market will get a little bit hyper and start whipsawing. Winning trade in the second level, winning trade here, winning trade, winning trade. You can see what I mean. That's why the percentage of winners is so high from your first visual looking point here. And I'm going to give you very specific rules why you wouldn't have taken this crossover, but you would have taken this one. I'll get to those in a minute. I'm just flashing through the charts so you can see we don't hide anything at Day Traders Action. A lot of these seminars, I attend them. It's kind of one of my hobbies to go and watch what everybody else is doing, and they use these scrunched up charts, and they just show the winners a lot of times. They don't show you the overall chart. They'll just hang in one specific area. And that's okay. That's their business if that's what they want to do. But we tell you everything and disclose all the rules up front before you purchase Boomerang and allow you to look at many webinars and video tutorials. You can stop and start these charts and see. And I'll be going over those in detail in just a minute. Winning trade, winning trade. Here's another winning trade here. This was a steep line. We don't trade against that. I'll go over that in a second. I'm just showing you here. You notice how when that white line crosses over, you get these winning trades. Well, it's part of the methodology that I developed. It's new using the dynamic trend bands, but Boomerang Day Traders always had very high percentage of winning trades. It's just that the bands now have allowed me to give such specific and exact measured trades that I can do these tutorials where I'm going to show you all of the exact trades to give you an idea of how well it works. Before it was possible, but it was not quite as consistent with the crystal clear entry rules using the bands. You see, I'm not going to go through all the charts here, but I'm just showing you that when the white line crosses over and you've got a trade channel in that direction, it's very easy to see and measure what's going on as far as that is concerned. Now, I'm just quickly monitoring some questions here. Again, thank you for your questions. Choppiness and all that won't be a concern because I'm going to be showing you how we deal with all that as we go forward. Right now, I'm just showing you how, according to the rules, the white line's crossing here. And you'll see how the prices move. 6:30, there's winning trade here. Okay, enough of this. This was just a basic visual lock-on so you can see that I'm showing you all the charts, not just select portions. Okay, now what we're going to do, and again, this is not one of my usual kind of more dynamic seminars. I even had some audio problems in the beginning, which, sorry about that, we got it fixed. This is not my usual seminar where I'm a little more dynamically trying to explain all the details of Boomerang and all that. We're actually going to be moving away from that because using the dynamic trend bands, the method is so crystal clear and simple that there's really no need to go into all these detailed aspects of the indicators and everything. Of course, I'll have some seminars on those, but they're really not necessary anymore. The dynamic trend bands have changed all that. Now, you notice first of what I'm doing, I'm widening out the chart so you can see everything where it's moving here. Now, here's what I've seen other presentations, and this is how they show you the chart. They go, see, we got short here, or we got long here. You can't see what's going on. I'm an advocate of widen these out as much as possible so you can see exactly what's going on. Okay, believe it or not, we're going to get started right now. This is 7:29, and what I'm going to be simultaneously doing, and this again will be recorded, so if you want to later go back over this in detail and look at the charts, and you can stop and start it on the recording, you'll be able to see the exact trades and how you can produce a very nice career income just trading the 4 NQ contracts. Here is a rules and methods sheet that I will send out to the Boomerang Day Trader owners. And if you are extremely interested in purchasing Boomerang Day Trader, just email me at mohan@daytradersaction. Again, it's mohan@daytradersaction.com. And I'll be glad to send you a copy of this sheet. Just to go over it, you can see how short it is. That's it. That's all there is to it. I'll read it to you, and then I'll keep bringing it up as reference. It's quite simple in principle, just a few rules to learn. However, trading the markets is complex and high risk. Regular, dedicated practice is needed to succeed in understanding the market's various nuances and pattern sequences. Using this proven approach, you can follow our video tutorials and see exactly what happened, because there's literally hundreds of charts on our video tutorials where you can go over, you can stop and start and compare these notes. So we look for trades when the white line, which is the fast line rim of the trade channel I just described, crosses the dynamic trend band number 2. That's when we start looking for a trade. The dynamic trend band number 1, which is that thinner dashed line I showed you earlier, this one right here, see that? Must be in match the color of the trade direction, not match dynamic trend band number 2. Number 2 is simply this thicker line, and we're looking for the crossing regardless of the color. And here's the key thing to the accuracy I've been able to derive now from the new core approach that allows me to show you these figures with 100% confidence and not even a concern that I know you will be able to duplicate these results if you just follow these simple rules. Must be in close proximity to the dynamic trend band number 2. If dynamic trend band number 1 is on the opposite side of number 2. Now, if dynamic trend band is on the same side of the trade you want to get in of number 2, then those trades can just be taken. But if it's on the opposite side, like most of them will be, we're going to look for, on the mini NASDAQ, the NQ, approximately 2.50 points or less between the dynamic trend band number 1 and 2. That means when you get a crossover right here, you see this? You're going to, before you trade that pullback signal line, you're going to look for the dynamic trend band 1 and 2 to be within 2.5 points, and that'll confirm the trade and keep you out of trades that are going to end up being choppy. When the conditions exist, a trade is taken within the trade channel on a pullback of the signal line. That's the dotted or the dashed line I showed you. If the dynamic trend band is the same color and on the same side of the dynamic trend band number 2 as the trade channel, and the slope of the dynamic trend band number 2 is relatively steep, then a second level trade can be taken on a continuation of the trade channel, and no third level trades are taken. Do you see? That's it. Now, I hope that isn't complicated for you, but I'll make it simpler for you. As far as the rules, There's only 4. Avoid taking trades in choppy markets, becoming adept at reading the volume meter with ADX, which is described on our blog under resources. Every trader on this webinar should have a volume meter to know exactly how much volume is coming into the market that you're trading, regardless of the market and regardless whether you use Boomerang Day Trader or not. Choppy market conditions often start with fast spike candles, which are larger than immediate previous candles, and then quickly seeing these reverse candles of a similar size with the colors changing up and down. I will find some choppy areas and you'll see exactly where this rule applies. Now here's an important second rule. First is learning to read choppy markets. If a fat channel forms from 2 to 3 spike candles or more, do not take a trade on the signal line on those trades. Avoid the trade, or in consideration of whether the 2 dynamic trend bands are the same color, you can trade a pullback to one of the dynamic trend bands, which is usually 50% or more into the fat channel, and I'll show you that in a second. And the third and last rule, do not trade against a steep slope of the dynamic trend band number 2. And we'll go over that in detail. Wait for a flattening of the dynamic trend band number 2 and current price run forming the steep slope. For a shift, to start noticing that shift in the flattening of the dynamic trend band and the flattening of that steep slope and a new white line crossover. Again, these are going to all show up in this month of trades that we're going to go over right now. That's it. Now, if you again, I keep coming back, because if you're a surgeon and you're making $200,000 a year, $300,000 a year, do you realize how many rules you have to know? You've been to 6 years, 8 years in medical school. You've been apprenticing. You've got all these assistants with you doing the anesthesiology and everything. I've had several surgery clients over the years who've told me what I do in trading is much more complex than what they do as surgeons. However, with Boomerang Day Trader and these new simple rules I just showed you, this is all you have to learn. DTB is dynamic trend bands. It's an abbreviation. So to go and make $200,000 a year with a small account, it's not like you're putting up a large account, and you don't have to go to 8 years of med school. All you have to do is learn these simple rules and become adept at them. If you don't follow the rules, you're not going to get the results. If you're a surgeon, you have to become expert at what you do. Otherwise, you don't want them operating on you, obviously. If you want to become an experienced trader, and in my view, stop wasting money on these expensive, boring trading rooms and relying on other people, all you have to do now with the latest revolutionary update in Boomerang Day Trader is to learn these simple rules. Now, Boomerang Day Trader has been one of the top trading systems on Ninja since we started back in 2009. It's now just become completely revolutionized and is even simpler to where I can post the exact trades in the setups, and I'm going to keep them archived for months and months and years into the future. In the middle of that, during the week, I will do supplementary 5-minute video tutorials for each day. Not each day, but I'll pick a day and I'll do a video tutorial when I have time to do that. You see? So this is all you have to learn to make a surgeon's type income or a highly paid executive's income without all the extra effort. But you got to get good at what you're doing. You have to follow the rules. But there's not 10 pages of them. This is it right here. Now, having gone over that, I'll be bringing this back up and referencing this. If you're highly interested in Boomerang Day Trader, I can send you a copy of this. If you're a Boomerang Day Trader owner, I'll be sending that out. And if you don't happen to get it in the next couple days, just email me at mohan@DayTradersAction. I'll send it to you. Okay, let's get going here. This is 729. And again, this might even be a little bit boring or whatever, but if you think making 200 grand a year at trading is boring and getting rid of trading rooms and stopping the endless search that you're probably doing now, going to the endless seminars and different things, well, then this will be well worth your time to be spent figuring out that, hey, I can do this, and then I can go do something else besides trading and going to webinars. What a concept. Like that Elvis video I showed you. You can start dancing because you'd be happy. You've solved the trading thing, and you can just go ahead and get up every day and go trade and make some money. Here's the market opening here. The white line crosses a dynamic trend band, and here's where I need to switch over the cursor to the crosshairs. You right-click on the chart, go to cursor and crosshair. The reason is now I can show you the measurements between the dynamic trend bands that will keep us in the right trades. Okay, the market's opening. We get a white line crossing over the dynamic trend band number 2. Now notice here, 3064 quarter is the caught right at the exact time of the crossover. You jump down here. You'll get very good at this. It's a piece of cake. 3064 quarter is the current number on the dynamic trend band number 2, and 3065 quarter is number 2 on the dynamic trend band number 2. Do you see that? That spread is very tight. That's 1 point. And we're looking 2.5 points or less. You might sometimes it might be 275, and you're going to be reading this stuff real quickly. So you're just looking for that general tightness on this spread. Once you get this concept down, your life is going to change with trading with Boomerang. And if you buy Boomerang, the minute you unwrap it and get it downloaded, you're going to know exactly what to do because you've already studied this. And the very incredibly small price of $11.95 you paid, or if you get our total package of $13.95, it's peanuts compared to what you can make. You see? Okay, here we go. New trade channel open, white line crosses, the spread's thin enough. You buy the next pullback signal line, which is right here, 66.5. You're looking for 3 points, obviously much more. Now, for right now, don't worry about runners. Oh, gee, they went all the way up here. I know that, but it doesn't matter. We don't care about that because we're trying to achieve the results I showed you for a 1 month gain of approximately $25,000 just using 4 contracts with a $5,000 margin account. Maybe 6. You can margin it at whatever level you want. You can put in $100,000 if you want. It's just up to you. But you can margin it for as low as $5,000, trade 4 NASDAQs, have very minor risk because we're only looking for a 2.5 point loss, which is $200, and every trade of 3 points is $240. I need you to understand this math and stop worrying about, and please don't ask me, does this work for gold and crude oil? Because I'm showing you a way to make $20,000 a month. Forget about gold and crude oil. Those aren't important. And those contracts, it's a whole different world anyway. Every day on the U.S. stock index, basically, you're going to have action to trade. Yes, you can use Boomerang on a gold and crude oil, but I'm showing you NASDAQ. Why would you want to go against a proven system and trade some other contract when you can just trade NASDAQ every day? Okay, so there's your trade number 1 winner right there. There was no second level trade because there was no counter pullback and then a new trade channel opening. You see, you'd only take a second level trade if there was a retracement and then a new trade channel opened. We'll get to one of those in a minute. They'll definitely show up. Here's your next trade. White line crosses the dynamic trend band number 2. Here, see that? Now, here's where you want to learn this. At the time of the crossover, right here, dynamic trend band number 2 was 73.25, and dynamic trend band number 1 was 76. Do you see that? The spread is too wide. 73.25, 76. It's too wide. You want to have it like 2.5 or less. That's where you get some good success going. So, the pullback, you would not take this trade until this spread came a lot tighter. Now, on this next candle here, the spread is 73.5, 75.25. That's your 2 points right there. Do you understand that? 73.5, 75.25. That's just 2 points. So you'd take the next pullback here to the signal line at 72.75. Now this one's not going to be a large mark because we've already crossed 6 pullbacks here, but that's okay. You know to buy, sell it at the pullback to the signal line. 72.75 was the signal on the pullback to the signal line, and they came down to 69. So there's your 3 points. 72.75, 69 even. 3-point gain. That's the second win in a row. Now notice here, we had this retracement with a counter buy channel, which of course is not a trade because that's not the rules I showed you. And the white line did not cross over dynamic trend band number 2. So we get a counter channel. But look what happened. Well, what happened here is the new channel opened. You got a pullback to the signal line, which was at 70.5. Now this happened really quick, but there was an alarmed marked pullback to signal line at 70.5. And they came down to 66.25. Another 3 points. Very fast 3 points there. So now we've had, and I'm just doing the first day real slow, and then we'll zip through the others. 1 winner, 2 winners, second level winner here. And now we're waiting for the next signal. Now what starts happening is the dynamic trend band number 2 starts getting a little bit steeper here. You notice we had a buy channel here. It's not a trade until the white line crosses the dynamic trend band 2. Now right here it does not cross it. It just barely, let me blow this up for you and show you. What's going on here? Okay. All right, so here you can see, look at that. It came exactly to the rim, but it did not cross over. You don't want, that's not a trade. You want the white line to cross over, and generally the whole configuration start moving on that side, you know. So this set up a second level trade too. Why? Matching dynamic trend bands. Now, our rule is to not take a third level trade, so you might have followed that rule and not taken this one. If you looked at the overall market and the tape in the high 5, which is something you can learn from my daily directional forecast site, and you said this is a really bearish market, and you saw that it struggled to try to cross over the dynamic trend band, it got steeper here, said I'm going to go for a third level trade. Even though that's not the rule, with a tight stop, what's the harm? Had you taken that, here's the pullback to the signal line right here, 66.25 for a strong 10-point move to the downside. Now, this is what's called a steep line here. So obviously we're not going to trade right away against it. We want to see it flatten. Now the way you can always do it by just following the rules of the spread between the dynamic trend bands. Here's a crossover right here. But in most cases, after a strong move like this, let's tighten this up. You can see this was pretty decent whopper move to the downside here. When that happens, generally, you want to let this dynamic trend band number 2 kind of flatten out. See how steep it is here? Yes, they've crossed over, and that's the rule. And this trade would have worked out. But what happens is that you're a little bit better off. This is turned blue. Obviously, we're watching the spread here. So the spread is 58.5, 56.25. So this is right in the realm where you could have taken this because the spread was tight. I would have probably waited on this. Why? Because this is so steep and we just had a big run. A lot of times at the end of a big move, the markets are kind of choppy. Well, sure enough, you could have waited and just bought this pullback to the dynamic trend band number 1 after it crossed dynamic trend band number 2. You could have just taken the trade here. The spread was tight, and you might have just ignored this steep line, but in most cases, you just wait a little and either that or take a pullback to the red line, but you get a little better price, and up they go. 4th winning trade in a row, no stop outs. That's why when you see these astounding results, I'm showing you exactly right now that these are very real. These are not real live trades, but the setups are very real, and the rules contain the trade and give you the results. Pull back to this a counter move here, but the white line does not cross the dynamic trend band, and a new trade channel opens up, right? Second level trade with a what? Steep dynamic trend band number 2. How do you tell if it's steep? Well, see when I put my cursor down here on this dynamic trend band? That's a flat dynamic trend band, obviously, because look at the cursor line here. When I put it up along the dynamic trend band, you can see what I often joke, it's like a piece of pizza from here to here. You look and see how thick that piece of pizza was. Well, you can see after this pullback here, retracement, and then a return up again, look how big that triangular shaped thing is there. That shows you how steep the line is. By the pullback to the signal line, and up they go. Now we've had, how many was it, like 6 winning trades in a row, and we're getting towards the later part of the session. So you took this second level trade. Now we're getting into the final hour of trading, right? And that's okay to trade that. It's always a little riskier. Just use common sense. Final hour trading, and for God's sakes, if you had 6 winning trades in a row, take a break. Forget the day. See what I mean? What's this desperation to trade all the time? Just, you had 6 winners in a row. It's not a question of pushing your luck or anything. It's just take a break or keep following the system if you want. White line crosses the dynamic trend band at the time of crossing, 67.75, 70, 50. The spread's too wide. That's a 3-point spread. 2.50 or less is ideal. So you wait. Well, what about here? Here's a pullback here. What's the spread here? 68, 70. Well, there's a 2-point spread right there. So say you sold short here, which would have been okay. That would have been within the rules, but you should have considered maybe it's a final hour. I've had 6 winners in a row. However, 67 is your entry, and a reaction against that is 68.75. You see that? The spread tightened here to 2 points. You got short, following the rules, 66.75, 68.75, 2 points. The stop is 2.50. You would not been stopped out in this trade. You're short at 67, and they came down to 63.75. There's our 7th winner in a row on 7/29. I just went over and showed you the exact rules, the exact setups, and I showed you that the trades all stayed within those rules, contained the stop, and we had 6 winners in a row on these setups. These are not live trades. These are trade setups that are proven, and using dynamic trend bands were very successful. 6 winners in a row. Or this would have made it 7. 7 winners in a row on 7/29. Okay. Now I'm going to speed up a little. Again, this is going to be recorded. If you don't want to watch this anymore, whatever, you can go ahead and watch for the recording. I'll have a recording up in the blog, and like I said, I'm going to create a special section that's going to show the exact recap that I described to you earlier of each month, and I'm going to have a recap video like this. It'll get a lot peppier over the months because it'll be something that we do as a routine. Okay, so new day, 6:30 right here. We're going to speed up a little. I've gone over all the rules. You can have a copy of these rules if you're highly serious about buying Boomerang Day Trader. If you're a Boomerang owner, I have a list, and I'll be sending this out to all of you later today. If you don't get it, just email me, and I'll send you a copy. But don't ask for this unless you're really serious about buying Boomerang. Boomerang's only $1,200, and if that's a stretch for you, you don't belong in the trading business. We don't have free trials, and we don't have a trading room, because I'm basically showing you that it's a waste of time being in a trading room anymore if you buy Boomerang and you just follow the exact rules. Then you can go have some fun with your family after you're done trading, not waste time listening to some boring trading room guy going on and on about markets doing this and that, and this report came out and that. Yeah, it's whatever. I don't like trading rooms. They're okay, but very boring. Anyway, white line crosses the dynamic trend band here right on the opening. What's wrong with this trade here? The spread's really tight, right? The dynamic trend band crosses here. But what's wrong with this trade right here as a white band is crossing over? A little quiz for you here to make sure you're paying attention. Does anybody know? Can you answer me on the thing there? Thank you very much. Congratulations, Nick. Congratulations. Awesome. This is a steep dynamic trend band. This market just leaped to the sky in during pre-market here. The trend band has expanded over there. It's too steep. So all you do is what? Just wait. Wait for it to flatten out a little. The spread is fine. Put your cursor up here and you see right here how it's flattening. So this is where you'd get in, right on the trade right here. Once the dynamic trend band number 1 is below number 2, you can take any trade on that side within the rules. The spread is just when they're on the opposite side. This spread thing is a new thing that I discovered after hours and hours of research recently, and I said, how can I make Boomerang the most accurate and precision system that I can record the trades and show traders with absolute defined parameters how to stay out of the choppier trades and get in the best ones. And this is what I discovered, and it's amazing. That's why I'm doing this right now. Short at 76, down to 72.25. There's your 3 points. Why not 3 points? Why not hold longer? Because I've developed an exact system here that you can use to build up those kind of gains that I showed earlier. That's all it matters is at the end of the month, do you care that you caught 5 or 6 really big runners and at the end of the month you made $3,000-$4,000? Or that you systematically scalped 3-point winners with 4 contracts, followed the rules really carefully, and you made, $15,000 to $25,000. I don't know about you, but all I care about is money. That's the only reason I'm in trading. I can't stand all these boring webinars and indicators, and I do this for a living. I design indicators in Boomerang Day Trader, and I trade for a living, and I manage my hedge fund. But my God, all I want is the money to get superior results, raise my standards, and have with absolute certainty that I can keep producing the results that I want, make the money. Here's the next trade. So far now we start out the market, we got 1 winner in a row following the rules, waiting for the dynamic trend band to flatten out. Here's number 2, white line crosses dynamic trend band. Look at this spread. See, now you're getting good at this stuff. I can tell. I can feel it. 3077, 3074. That spread is still too wide here. You can just visually look at it and see that, right? But I'm giving you this simple measure for NASDAQ. Don't ask me what it is for crude and gold and all this. You don't need to trade those contracts. Trade something that you can make $20,000 a month on now that has action every day. Get involved in that. A chart is a chart is a chart. And I'm showing you the best chart and the one to use. And it's not ES. ES is too convoluted and contracted nowadays. It's used for too many other things other than day trading. NASDAQ rocks. This is incredible. Spread is too wide. So what do? Wait. Look at the next pullback here. 77.25, 74.75. Well, we're getting close. That's 2.5 point spread right there. What do? Well, the rule would be to just grab the trade. So you buy the trade here. Maybe it jumped right when you did this, so you can get a little cheaper here. Let's take the worst fill. Let's go to the top of this candle, 78.50. Market moved up to 85. 3 points. Pull back here. White line does not cross the dynamic trend band. You see that? Let's find a trade where we get stopped out on. Starts pulling back, did not cross, it moves up again, did not give us a signal because it quickly spiked lower. Now, first of all, this candle right here and this candle right here were 2 fast simultaneous spikes lower, and the candles, according to the rules, were larger than the others. Choppy market conditions often start with fast spike candles which are larger than the immediate previous candles. See that rule? Simple rule. Spike, spike, spike. Well, that formed a mini fat channel here, but still emotions might have got to you and said, I'm going to go short. So you got short here at 80.5. They came down to 78.75. It looked pretty good, but then all these candles started turning green here again and a counter trade channel. Well, you got stopped out. 80.75. However, you could have jumped out at 81.70. You see, new trade channel, all this stuff going on here. You don't have to wait to 2.5 points. You could have probably gotten out here with a tighter deal. White line crosses the rim of the trade channel. I'm supposed to be speeding up, aren't I? White line crosses the rim of the trade channel. What's the spread? 83.25, 81.25. That's 2 points. Buy the next pullback signal line right here, 84. Huge move to the upside. Now this also, the immediate rejection of this downside here would have told you to look for a larger scale move, but that's theory and all that, and I'm expert at that, and I can teach you all that stuff. But for right now, we don't care. We're just following the system. We want our 3 points. We want our $240 per trade, or we'll take our $200 loss per trade on a wrong trade. And if I can get 6 winners in a row like the previous day, what's my calculator say here? 6 times $240, $1,400 minus 6 trades, 4 contracts is 24 times 375 a trade, $90. So I'd rather have a $1,300 day than worried about catching runners or what's crude oil doing, what's gold doing. You know, these guys that look at 4 or 5 charts same time. What for? The goal is at the end of the month making the money, not catching runners or being a big expert and I'm checking out crude and I'm watching gold. Big deal. Who cares? How much money did you make? You with me? White line crosses a steep dynamic trend band. The spread here, 92.75, 95.25. So that's right around 2.5 point spread there. You maybe let the red line come over and cross here. See that? Make sure the trade signal line, you get that configuration, that trade channel crossing over, boom, hit them to the short side at 92.25. Let's say you got filled at 92 or whatever, a worse fill. They came down to 86.75, so you had plenty of room to get 3 points. Here you go, typical second level. The red, notice the dynamic trend band, number 1 is still reddish pink, magenta, bearish. This is bearish and getting steep here. White line tries to push up here with a counter channel. You can't take a second level trade till you get a counter channel first. Then when they reform a second level channel, pull back to the signal line and down they go. Now I haven't talked about this here, but you also had a bias accelerator alert here. But we're just ignoring all these other boomerang things. Notice I have not talked at all about the bias indicators down here. The dynamic trend bands will do all that work for you now. I've refined it. It's revolutionized. These are great to monitor, hyperscalp and everything. There's a whole way to read it. If you want to go into precision accuracy reading of each tick in all the markets, you can use hyperscalp and my other indicators, but I'm showing you the basic core method here. So I lose track because I'm teaching this stuff and I lose track. So we had 1 winner, 2 winner, a stop out, a third. So we had 2 winners. Wait, let me check here. 1, 2 winners, a stop out, 3 winners, 4 winners. So 4 winners, 1 stop out, 5 winners, second level move, and 1 stop out. 5 winners and 1 stop out. Nothing wrong getting stopped out. If you don't like getting stopped out, please immediately leave the futures trading business. In fact, it's the exact opposite. You have to learn to love stops. Learn to love getting stopped out because that's part of what we do. If you're against getting stopped out, that's the wrong mentality for being in this business. Just warning you. spiky. Look at, okay, here's another good example. Notice how these simple rules I gave you always show up. It's the same old routine. What's wrong with this deal here? It's a huge move. Expect choppy action at the end of huge move. How do you tell it's a huge move? Well, you can look at, obviously here, but look at the dynamic trend band. Once prices cut through that, though, it's still steep, but you got to watch things flattening out. Number one's going to flatten out first, so just let things kind of flatten out here. Get that pizza pie measure I'm giving you. Notice it? Now there, right here, that's a flat dynamic trend band. You don't have to wait for it to completely flatten out. Once you get the crossover dynamic trend band number 2, pull back to the signal line. There's our, I believe it, what was it, 6th or 7th winner in a row. We're still going strong. Here's the pullback, retracement here. A little bit of choppiness. They're getting over this long, steady move here. Let the market get going again. New trade channel, right? This here, you say, well, isn't that a buy chain? This happened so quick, and all this multicolor switching up and down, and then the colors changing. This is just choppiness. That's all. Just wait until you see a crystal clear move. White band comes up here, pull back to the signal line, and up they go. 7 winners in a row. And again, this is 20 minutes before the market closes. You know what? 7 winners in a row and 1 loser. Let me do the math again real quick. 7 times 249. We're just taking the cost of a winning trade. $1,700.43. 1 loser is 200, so around 1,500, and commission on, what was it, 7 trades, 7 times 4 contract, 28 times $3.75 is about the average. $105. So, $1,400 for the day. Better to go in and scalp 3 points and follow a crystal clear system and go home with $1,400 and take your wife out to dinner or husband, or take the kids out to the movies. You're sitting there eating popcorn and you just made $1,400 in trading, and it wasn't that hard because you followed Mohan's exact rules. Look at that. What kind of deal is that? That's a good deal. That's what trading's all about. Stop is 2.5 points, which on NASDAQ is 10 ticks. 12 tick gain, 10 tick loss. And you can, again, it's all automatic. You can set it right here. I don't have it set for that on here. I have a 10 and a 12, and I have other configurations, but I'm just making a point that you can set that up automatically where 1 click and it sets a 2.5 point stop and a 3 point gain. And the only reason you'd have to fool with it was like that trade we had just a while back. I hope you're paying attention and you remember that, where we could have got out for a smaller loss. Generally, you don't have to worry about that, but it's always good to, you want to monitor your trades, but you have your automatic stop in, so you're not going to get hammered too hard. Okay, now, just as a note, I know it's running a little longer. This is the first one I've done. My next few over the months and months ahead will be a lot smoother. We are currently, let's see, what day is this? Okay, the point is we're moving ahead here. We've done 3 sessions. You can see they're about 80%, actually higher winners in the last few sessions. Here's let's go for this one here. White line, okay, market's opening. White line here, after the opening crosses the dynamic trend band. You can see the spread is very tight here. Hold on a second. I think I backtracked a little. No, that's okay. Can't figure this thing out here. We got a dynamic trend band cross here. Pull back to the signal line. Up they go. Winning trade. White line is crossing the okay, here's a good example. White line. This gives you a very good example why the spread is so important. First of all, steep line, right? White line crosses dynamic trend band. Spiky, fast candles down. This is one that shows all 3 rules in one. This is fantastic. That's what I like about going through them individually with you here. Steep's dynamic trend band says don't trade until it flattens out a little. The spread at the time of the crossover, the white line right here, 94.5 and 97.5, 3-point spread. It's too wide, steep line, and these spike candles formed a fat channel. What does that tell you to do when you get a fat channel? See, first of all, let's get that dynamic trend band to flatten out a little, and as the spread thins out, we're still in a sell channel. Let's try to get a trade somewhere short between the red line, the rim of the trade channel, and the dynamic trend band number 2. That is 94.5 to 96.5. And you can see when they pulled right back up to the dynamic trend band number 2, which was flattening at that point, the market started getting hammered to the downside. Or you could have waited till this flattened out more. The trend band, the spread is very thin right here, and just traded this short here at the signal line, and you would have got 375, let's say 3 even, down to 90.25, 3.5. There's your 3 points. Or you might have, maybe you got a really crummy fill because there was a lot of spikiness in here. Maybe you didn't get 375. Maybe you got 3 and you missed the 3 points here. Well, like a brave soldier, you hung in there. Why? Because both dynamic trend bands are magenta, bearish, and all the indicators down here are bearish. So you hung in there. Oh, and they spiked them against you. But no real tremendous move. Nothing to get out of. Just wait. And down they came, gave you 3 points. Here's a good example of a stopped out trade or a confusing one. Now this would have tied in with the rule of learning how to read spiky markets by using our volume meter, which is described on the blog at boomerangtrader.com under resources. There's 2 articles, how to build a volume meter and let's add ADX to our volume meter. And choppy market conditions, you can see, started spike candles and fat channels. So combining those 3 simple rules, which are the only rules you have to learn, other than the steep trend line, this is just a bunch of BS here. I mean, here's a wide spread. These candles are shooting down here and then shooting back. The minute you see that, don't think you got to trade that junk. Just wait. Well, it was junk because look, it formed a new fat buy channel under the dynamic trend band. Notice how this is how precision Boomerang is. Aren't you glad I invented this for you? It took me years and years of watching and trading the markets every tick, every day. Look how it just barely tried to cross over and didn't make it. Not almost, or did a little bit. Here too. The white line was contained in this choppy mess, which you would have been avoiding anyway. And then when it finally crossed over, you probably should have had second thoughts. I would have. Because look at these 2 spike candles about trading here. You don't have to trade. Just wait for clarity. So what if you miss? Oh, we only had 4 winning trades in a row today instead of 6 like yesterday. Gee, too bad. You only made $800 instead of 14. Well, kids will only be able to eat 1 pizza tonight, I guess, and less popcorn at the movies. I'm kidding, of course, but, you know, got to have a humor in this business, otherwise you'll die along the way. Too much tension. New trade line, signal line, crossing under the dynamic trend band, very tight spread. A lot of these spreads, you can just glance at it, see it's tight. Those are the trades that work out, my friends. 93, shot them down to 89.75, 3 points there. Counter spike, see these guys here, man, they just want it to be bullish, and it's not bullish, and they're just, some cowboy in there has just got his finger on the trigger, and he's just spiking that thing all over the place. So they try to spike back over, and yeah, here the white line dips over. Nice big charts. No scrunchy charts for Mohan. I show you the truth. Yes, the white line came over here, but what's wrong with this deal? Spiky, choppy candles, hyper whipsaw garbage. That's one of the rules. Don't trade that stuff. Just forget about it. Just wait. Then you see the dynamic trend. Now here's the key. The dynamic trend band, same color as number 1 and 2 are the same color, and dynamic trend band is below, number 1 is below number 2. That's bearish. Now you got a new sell trade channel. Hey, it's bearish. Go short. You got a lot of information here. Up here you got another reason, by the way, forgot to mention this. Why other reason would you not have taken this as a, quote, buy trade? The rule is a dynamic trend band has to match the same color as a trade channel. Like here, this was a good trade here. Dynamic trend band, cyan, sell trade channel, tight spread. This has to match to get in the trade. This is a bearish dynamic trend band dual. Dynamic trend band number 1 is crossed under number 2, making it more bearish, and they're not the right color. This is not a stopped out trade. This is not a trade. Oh, the white line crossed over the rim of the white line crossed over the dynamic trend band, but these are spiky candles contrary to the dynamic trend band. That's why I'm saying you don't have to worry so much anymore about these bias indicators down here. I definitely stressed those a lot more in the early days, but I've revolutionized it. Things change. Things get better in some cases. Pullback sig line, down they go. I know I'm taking way too long. Sorry about that. We're going to speed up now. White line above, spread here is 87.25, 84.75. It's 2.5 points. That's okay. It's a little tighter on this one. Buy them, up they go. No second level here because why? There is not a counter trend channel. Here's a counter trend channel here, but no second level up move. So you start looking for a down move. White line crosses the rim of the trading channel. What's the spread here? 88.75, 92. It's too wide. You're going to have to wait. Oh, the market shot down to the downside. No trade. No, see that? No pullback sig line. Spread was too wide. Hey, you missed some. That's going to happen. That just shot to the downside. You couldn't have caught it anyway. Even if that spread was tighter, it didn't pull back sig line. It just shot to the downside. White line crossed the dynamic trend band. The spread, what do we got? 87, 84. The spread's okay. Same thing. Shooting to the upside. Now, there was a pullback sig line here, right exactly when the white line crossed the dynamic trend band. Some of you may have caught that. Otherwise, we would have gotten short up here on this pullback to the dynamic trend band, or up here would have been okay too. Yeah, it's a little long in the tooth, but what happened? Why would you say this would have been okay? Because both trend lines are the same color. This is turned to bullish, and the trend band's just right here on this exact pullback signal line is just getting ready to cross over to the upside, signaling a larger scale move in about 70% of the cases. That's one of the indicators too. For those of you who absolutely insist, I got to try to catch these runners because I'm watching this and seeing, oh my God, so many of these turn into runners. One of the rules is if the trend band, you're in this trade long and this trend band crossover, about 65-75% of the time, this crossover is going to give you an accelerated move. Here's another example of that. I could go over that, but that's not what this webinar is about. This is supposed to be really mechanical webinar, just showing you the exact rules, how I came up with those figures so no one can question them and call me a liar and say this and that, and you didn't trade those live and blah, blah, blah. That's not the purpose of this. I'm showing people who want to buy Boomerang a crystal clear system. Most of these systems out there, you've noticed these trading rooms, and they sell you their indicator. They don't publish how many trades were made that were accurate within the system because their system is generally kind of vague and sort of, well, we might have not have taken that one. We would have taken that one. Maybe it's a little vague. Trust me, I know. I've been following them for 10 years. I've seen just about everything out there. What's wrong with this trade? The white line's crossing the dynamic trend. And what's wrong with this trade? I know you already know because you answered earlier. Isn't this the same old routine? Fat channel, steep dynamic trend band. Don't trade. Do what? Just wait for a tighter spread here. Wait for the dynamic trend band to flatten out a little as this gets closer, and do what? Trade a pullback if you still got a sell channel. Now, this turned into a buy channel, so it would have been a little tricky, but the idea is to trade, try to get a better price, certainly not at the bottom of this fat channel, but a better price up near one of the dynamic trend bands at or above the red line. Now, because this traded, you might have had some pause, which is understandable. No big deal. Just wait, because what happens? A new trend, new pullback to the downside. Now you've got the dynamic trend band crossing. One is crossing number 2, and you get your trade pullback to signal line in the new sell channel, and down they go. Now, I'm not counting how many winners we had, but I think there was one stop out and a whole bunch of winners on this day too. Sorry, I've got all those records that I'm going to be publishing on the blog every month. We'll do this, plus I'll show how many trades, how many gains for each. I'll go day by day. How do you like that? That's a commitment, huh? And I don't need to do this. Boomerang sells like crazy anyway. I'm doing it because I want to be one of those guys in the industry that backs up his talk when he develops a system, that he backs up his talk with how the system works. I know that trading it live is going to be a little more difficult. It's not going to look as easy as a still chart. But if you can get these rules in your head, already you can see from today they're becoming like the same old routine. You'll catch these trades, and they will work out. You notice how when we get in, there's very little pressure on the 2.5-point stop. They get in. That's because you got everything going on your side on the bias. So there's another winning trade. This one set up after a steep, huge, my gosh, monster move to the downside here. Same rules. You know, you got your crossover. This is too steep, so we're going to wait a little. You got some flipping back and forth on trade channel that tried to start a new sell channel. This is typical at the end of a big move, some choppiness. Now you see here as this flattens out and the dynamic trend band starts to move over here, you grab this pullback right here. This is 1 minute before. You don't necessarily want to take this trade. I'm just showing you it's a good example of how it works in spite of last minute of trading after a steep move. The system works beautiful. I just encourage you to buy Boomerang, learn these rules. Don't do it for me. It doesn't do me that much. If it did a lot for me, I'd charge you $5,000 for the system like these other guys. I got a promo the other day, and it had these kind of cheesy indicators and a bunch of stuff, and this guy was a former floor trader and all that. Yeah, sure, where's the proof? He showed no proof of that on his site. I've got floor traders who've endorsed me, and I show you pictures of them on the floor like I did earlier. Anyway, the point is he wanted $7,500 for his system. Don't worry, he'll let you make 3 payments of, $2,500 each. Well, listen. What's wrong with this trade? Steep line. You're still in a buy channel following the steep line here, and the dynamic trend band is still aqua colored, bullish. See that? Look how beautiful this is. Now the white line, yeah, the white line's crossed over, but there's nothing here to get short into because you're still in a buy channel. You got a C-bar line. Now look right here. Starts flattening. You got a new sell channel. This starts flattening. The dynamic trend band here now under number 2 has turned magenta, pull back to the signal line, and down they go for 3 points. Is this a buy trade? Of course not. It's a spiky mess after obviously some government report came out like they often do at 10 o'clock Eastern Standard Time. That's what this is here. Just a spiky whipsaw mess. I wouldn't even want to touch this. Just let it settle out and see what the indicators say. Then spike and then slam to the downside. Well, in spite of this, with the spread here, well, you got a fat channel. So what's the rule? I'm going to keep pushing this up here. And again, if you're highly interested in Boomerang Day Trader, not just a looky-loo, I can send you this rule sheet, simple rule sheet. Again, look, it's 2 small pages. fat channel rule. Forms of 2 to 3 spike candles. Do not take a trade to the pullback of signal line. Avoid the trade, or you're an independent trader, consider a trade on the pullback to one of the dynamic trend bands. If the colors match, well, the colors match. You got a crossover here. It's a spiky nightmare that created a fat channel, and a lot of this is so emotional. You maybe just go, whoa, 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 no thanks. However, if you're one of these brave soldier gamblers like me, I see this action. I'm going to buy it. I'm going to grab that pullback to the signal line here. I mean the dynamic trend band, and short them up here. 12.5 came all the way down to 7. So there is a trade there. Probably wait till you're a little more experienced. If it's just spiking like that, just stand aside. You had to do that a lot on this session. What day was this? 8-1. Boy, we haven't gotten very far here. Sorry about that. Same thing. Now here's a spiky market that had started at 10 o'clock. It's still spiking. Everybody's going nuts for some reason on this day. You could stand aside and take a day off that day, or you know, you can say, oh, there was a stop out. Okay, well, let's go for it. We say, okay, there's a trade channel. Well, first thing wrong with this here, 11 1/4, 9 1/4. Okay, the spread is okay, so you buy this pullback here to the signal line at 11 1/4, and it gets stopped out. Just barely. Well, let's see. Yeah, 11 1/4 got stopped out right in this area. Okay, so you're stopped out. However, say you bought this and now the candles all turn red. Well, there's your first sign that something's wrong with this deal and they're still spiking. So you kind of, you know, bravely got into this, but maybe a little foolishly too. Got into this trade 11 1/4, and here's some spike candles that are taken down to 9.50. You could have just jumped out of this with a slightly less than 2.5 point loss. Same thing, spiky candles. You got to just kind of let this stuff settle out. There's no really choppiness, and whipsaw markets are the curse of all day trading, but they can be avoided by following our system very carefully. So you got stopped out here. Maybe you got, well, you wouldn't take a fast channel, or maybe you got stopped out again here. Okay, let's call this 2 stop outs in a row. We've already had, on this day, just so you know, we had, let's see here. Oh, that's right. Yeah. We had this craziness here. We had one winner here. We would have avoided this because of all the spikiness. This was a brave soldier winning trade here, and we got 2 stop outs. So we got 2 gains and 2 stop outs, okay? Big deal. And obviously, all morning session, it's just been a choppy, spiky nightmare. There's nothing wrong with just standing aside. You don't have to trade, especially because we just had 3-4 days of very nice gains. Here's a classic fat channel here that ended up panning out. You know, you got to follow the rules, but sometimes on this one, you would have looked for a pullback, ideally, to 50% or so of the fat channel at least, like down here at 13.5. They spiked up, which is characteristic of the day. Pullback signal line came in at 1475, and they ran up for a 3-point gain. However, our rules would not have had us trading this. We would have looked. One rule, usually you're going to look for a pullback to the red line or the dynamic trend band, whichever one is kind of coming in first. Another rule is to look for like 50%. Just estimate halfway through that fat channel, you know, you might have bought it, which would have been right at the dynamic trend band. Well, lo and behold, it didn't happen. You would have skipped this trade. Steep line, spiky move. You might have got caught in this, got another stop out, but this one would have saved you. Standard, you know, double matching dynamic trend band on the same side of the trade. Pull back the signal line, up they go. And then late in the close, wouldn't have taken this. So to this day, this session was a little choppier, a little more difficult to trade. Now, I know this is boring, and I know we've gone over a limit. I had some tech problems originally, and we're back in gear here, but it's running a little longer. I am recording this, and I will be turning this off pretty soon. I just wanted to show you these. Let me speed up now. I want to show you and verify those results that I showed you in the email piece that I sent out and the ones I gave you today. And like I said, we're going to be setting this up very systematic on the blog, where you can go and click on a month. It'll show the total amount of trades, the average amount of trades a day, which is about 5 to 7, the amount of winners, according to, like I'm showing with the exact rules, the amount of losers, and the total estimated dollar gain. It's all hypothetical, and it's all shown for demonstration purposes to show you the potential of the Boomerang trade system to start a career, make money. Here's a new market opening here, crossover, pullback, winning trade. Steep, we're waiting for this to flatten out after the long steep move. White crosses over here, some flipping here. The spread thins out by a pullback to signal line, up they go. White line crosses the trade channel. The spread here is too wide, 20 1/4, 24. It's too wide. You got to wait for it to thin, like right here, 20.75, 23. There you go. Buy the trade this short at the pullback to signal line, 19.5. Down they come to 16. White line crosses the trade channel or the dynamic trend band 2, and up they go. What's wrong with this one? Same old routine. Spread is too wide, and you got a steeper line here with prices crawling higher. The spike, the colored candles changing rapidly here, turning bullish with the steep line increasing as we come into close. This is one of those really bullish days. Remember that one a few weeks back? You get the dynamic trend bands matching, trade a pullback signal line, and up they go. This is pre-market, 6:30. By the time they opened, this was already going, so you wouldn't have taken it. Crossing over the dynamic trend band number 2. The spread is 34.25, 32.25. You can buy this pullback to signal line here at 34.25, and they ran up to 36.5. Got a little bit crazy here. What did we? Well, we'd have been in at 34.5, let's say 33.25. This would have been tough, but there was no. It was a counter move on a trend up. You had the crossover right here of dynamic trend band number 1 over number 2. This would have been whipsaw. This would have been a little scary, but it was not a counter signal or anything. You had held, and you got your points. Not every trade is different, a little different. Every day in trading is a little bit different. Every chart pattern is a little different. But with the rules I've established with the dynamic trend bands, it's pretty consistent. This would have been an edgy winning trade. Here's another one of these trades where as the spread tightens here, the pullback signal line is way down here. It would have gotten you just barely a 3-point gain. This is a little wide in the tooth here to be doing it. You would maybe watch for the second level move here, which panned out beautiful. Fat channel against a steep spike. Avoid the trade or trade a pullback to the dynamic trend band, which would have been right here. Again, a kind of a scary trade, but you would have been long run 32.75, and sweating this whipsaw coming into the close, and then up they went. Now here was a day where it was just like the previous day, if you recall. The trades panned out really fine. You following the rules. They were a grind, no doubt. This one you couldn't have taken. It's too fat, too wide. Market had spiked lower too quickly. It's too risky getting short there. You just wait for the second one. This was a grind too, but they panned out. And, it's not up to Boomerang to make smooth trading days. It's up to the market to do whatever the heck it wants. Here's the market opening here. Let's see. In pre-market, we had a crossover and a move down. So we're watching that second one. The white line just barely crossed the rim of the trade channel. You might have got stopped out in this if you got into this, maybe, but then you would have quickly reversed on the second level move and made it back plus a little more. Then they just slowly flopped all the way to downside. And for you runner catchers, what you would have done is just use the dynamic trend bands as your guide to stay in the trade. Then they got steep. Then they started moving. Now, this always occurs. Once you get that crossover, you get that dynamic move. Sometimes they're bigger than others. Same thing, long move, steep, dynamic trend band. We got to let this thing flatten out. We got to let number 2 flatten out some. Usually on a crossover is a good time to look for that, but a lot of times in the crossover, you see here, they just make a dynamic move to the upside. So right here, usually the flattening can coincide with the thinning of the spread. Did you catch that? After a big move, the thinning of the spread is really vital. You see this starting to thin out, and you see this pullback, the signal line here, would have caught you a quick move to the upside. You could have gotten in further. Well, you don't want to get in after a spike move under any circumstance. This would have been it. Otherwise, you might have missed the trade. White line crosses the spread here. What's wrong with this deal? 17 1/4, 21, way too wide. See, this new rule I created is beautiful. It prevents all that. Wait for the spread to get around 2.5 points. 17.75, 20 1/4. That's it right here. This pull back the signal line here or this one, and there's your 3 points. Spiky choppiness, but look at this. The white line crosses over the dynamic trend band number 1. The spread, 17, is tight. Pull back to the trade signal line at 17.50. Up they go to 21. So again, I'm just mechanically going through the trades to show you how many winners there are, that ratio of about 80% winners and about 20% losers is very, very accurate. I am not making this stuff up. These are not live trades. I want to disclaim that again. This is hypothetical system where I'm showing you the exact rules, and I'm showing you how to apply these rules in a very simple way, simply using the spread on the dynamic trend bands and following the rules such as avoiding spiky markets with fast spike candles and fat channels and not trading against a steep slope. Those of you who have not bought Boomerang and have watched this webinar today are already expert in our system. All you got to do now is get it and apply it and start making money. And for God's sake, stop thinking about trading. Just start winning, making money, and then go do something else. Don't go to any more webinars. Just make some money and have a good life. Winning trade here to the opening. Second level trade here, a choppy move to the downside with the second level trade. Big move here you can see, expect whipsaw. Minute you see a big spike move with a steep dynamic trend number 2, expect whipsaw. Just tell yourself, don't be anxious to get in a long trade after this. Just wait. Let all this stuff change. Wait, first of all, you got to wait for the dynamic trend band number 1 to change colors. That's the first thing. And then in a big move like this, everything's got to flatten out. Ideally, a crossover here, color change, that's a good sign. But what happened when they crossed? Look at that. The exact second they cross. How do you like this, dynamic trend bands and Boomerang? It's like the market follows what we're telling it to do almost. The minute this crossover occurs, whammo, a spike to the upside. You see? Don't trade this, though. What do we do? Okay, what do we do? Here's a quiz. What do we do with this situation right here? You're in the markets. You own Boomerang. You're getting pretty good at it. You know the rules. You can recite them to me if I ask you, right? If I asked you, I called you up on the phone and said, what would you do? And you could recite the rules to me. That's what I want you to get to that level. You'd let it flatten out. You'd look for a crossover like we talked about, but what happened? Zam, a spike to the upside after this crossover. Don't worry, you're not going to miss anything. What is the rule? Pull back beyond the red line and ideally down to the dynamic trend band. Look at that. 2 taps exactly right here after a fat channel. Don't buy them here. 2 taps exactly under the red line on the dynamic trend band. 92.5 shot up to 98 and then kept going. Again, don't worry about the runners. A lot of times you're waiting for a runner and you give back all your 3-point gain waiting for the runner. That's not the system. I'm trying to show you a way to get in and out of the market so you don't drive yourself nuts and stack up a steady series of winning trades to pile that up into what I showed in the demonstration on 4 NASDAQ contracts with 173 trades and 81% winners, a $25,000 a month after commission. That's what you want. You want that laser focused in your brain. $20,000 a month, not this guy's webinar, that guy's webinar, this guy's system. Well, I really liked his. His looks pretty good, but I've been burned a lot in systems. Forget all that. $25,000 a month. How do I go to work in the markets and make $20,000 a month? And not 2 years from now after the guy sold me $30,000 worth of trading courses. Someone says, how do we get it? How do you get Boomerang? Well, you just go to www.boomerangtrader.com, and it says on the right there, it says buy Boomerang Trader. Just order it. It's only $11.95. I'm not gouging traders. I don't have time. I'm busy with my hedge fund and my own personal trading. I don't have time to run a trading room. I don't give free trials because that's a pain in the ass. I don't know your skill level. You might screw it all up and not follow the rules and say, oh, it didn't work. It's $11.95. If $1,200, frankly, is a stretch for you, you're probably in the wrong business. You're going to lose that guessing on your other trades in a few days. Get the right system, Boomerang. Follow these rules. I'm here for you. You can email me anytime with questions that you might have, and I will help you. Plus, we have what I showed earlier, a library of video tutorials and these webinars. And this one will be recorded. You can go back over it. Crossover, thin spread, up. Choppy, because a big spike move, steep dynamic trend band, it's going to be choppy. Expect it to be choppy. Don't be intimidated by it. Just say, let me see what happens when it flattens out a little. What's the flattening? Notice it's the dynamic trend band. One is blinking on and off here. That means wait. It's blinking red and blue. Wait a little. Oh, it got short here, but what happened? It's still too steep. This is way too steep here. And this is spiking a little. Let's play the devil's advocate. You got short here. You blew it, really. You didn't let this flatten out enough. Or say you got short here. They start. Your price was $9.75. You're short. They spiked up 12.25. You're stopped out. So what? Got stopped out. Oh my God. How could you let that happen? I became a futures trader. It happens all the time. In fact, again, what I'm showing in these results for August, out of 173 trades, 32 of them got stopped out. So that means 32 times over the month you got stopped out, but that's not very much. 1 or 2 times a day. Expect that. Expect to win and expect to get stopped out a couple times each day. Visualize 5, 6 winning trades and 2 stop outs. Again, I'll have these all broken down day by day on the blog. It's a lot of work, but I'm going to do it for you. White line crosses over. This is a weird thing here because you have this. Oh, this is pre-market. Okay, let's get a 6:30 right here. Market opens. White line crosses the dynamic trend band. Tight spread. Pullback signal line occurred here. 29 quarter. 32 stopped out. They got us on this one. They stopped us out. But this crossing over here tells you, look for 70% of the time probably, look for a strong move in the direction of the crossover. On a normal, more sales-oriented presentation, which I'll do more of those, I'd go back over 20 charts and show you the crossovers. If you own Boomerang, you can do it yourself. let's get back into this one here. Everything was fine, but the spike here, 28.75, 31, 29, 30. Yeah, this got stopped out. 2.5 points, a tight stop. Boom, we got stopped out. Guess what? Now, the one problem with this doggone, this little rascal here, is it was going to make a huge move, and they stopped us out quick in the move and never gave us a counter buy channel to give us a second level chance to get back in. Some of you, and you will do this when you get experienced, you'll say, well, both dynamic trend bands are red. I'm going to go ahead and get short. Now, I don't want to complicate the simple method I'm showing you here. However, another rule that I mentioned when you buy the dynamic trend bands, or you get those, you get in the download. One of the rules is when the dynamic trend band crosses the red line, look for a spike move in that direction, or a move in that direction. So you might have gotten short again here. But again, I just want to stick to the system today. You got stopped out and you missed a huge move. That's okay. What do we do at the end of the huge move? First thing that comes on our mind, expect whipsaw. Expect some choppiness or whipsaw. Don't expect to just get long at the end of a long downside move and be successful. You might, but it's rare. What do? We wait for the we wait for this to thin out, right? And what do we look for? First thing we look for, yes, the white line is crossing here, and that's going to happen because a reaction off that super downside move is going to be a jump to the upside. Don't worry about that. That's not the move you want. First thing is we start looking for the dynamic trend band number 1 to start flattening and turning this cyan bluish color, the bullish color. Then we watch for the flattening. You can see, when I put this up here, see the pizza there? Look when I put it right here. Virtually nothing. It starts flattening out. Then you get this crossover, dynamic trend band. You got a counter sell channel. Now you get a blue or a new buy channel here. There you go. There's the pullback and an easy ride to the complete higher move there. Huge move to the upside. Takes us into mid-session of the markets. And then we're asking ourselves the same thing. Well, what do we do? First thing you want to think on a steep blue line and a strong move, caution, choppiness coming at the end of the move. Wait for the dynamic trend band to change colors. It's now under dynamic trend band number 2, so you can get short on a sell channel. Well, I can see what happened here. The choppiness got us. Now, one thing, too, you might have avoided this because, look, these are all the signs of a choppy market. Look at these whipsaw candle up, red whipsaw candle down, a gray whipsaw candle up, red whipsaw down, 2 green spikes up. Generally, you're better off just forgetting this type of stuff until you see visible signs of it settling out. And you can see the madness didn't stop. It drifted down. But the madness just kept going. So when you see that spiky stuff, it's not boomerang is not correct. The market's choppy. And one of the rules is avoid choppy markets. It takes some skill in trading to learn to avoid choppy markets. You do that by becoming adept at reading the volume meter with ADX, first of all. Then you watch for those spike candles that are counter colors and all that. That's just telling you we don't know where, everybody's confused. And you don't want to be one of these guys and you're thinking you got to catch the action. Why? That's so desperate. These are just programs fighting each other. In most cases, this kind of extended action is heavy-duty trader programs, high-speed trader programs, algorithmically fighting each other. Goes up, the algorithms kick in, it goes short. Kicks in, it goes up. They're just fighting each other. Let's see what would happen anyway. You got short here. Based on all the rules, you got short here, 34. Let's say you got short at 33.5. 33.5 ran up to 35.5. You're still alive in the trade. 33.5 came down to 31.25. Then a spike against you. 35, you're still alive in this trade. The highs here was 35.50. Remember, we're short at 33.5. I took the worst trade here. You're still alive in this crazy whipsaw nightmare with counter channels and everything. However, notice this. The dynamic trend bands are matching color. So you bravely hold out. I hate these. I get caught in these and I just want to get out, but I stay in with the system. You know, it takes practice and time. Sure enough, 33.5, they finally shot them down to 28.5, and you would have had a very agitating 3-point gain on this trade, and you would not have gotten stopped out. The charts don't lie. The only way you would have got stopped out is if instead of getting 30, what'd I say? I said 32 half. Oh, it was up here. 33.5 is the price I showed. The only way is if you got a 2 ticks worse fill, you would have got stopped here. Otherwise, the trade would have panned out, and then forget it. End of the day. Okay, I know it's running late. Sorry, guys. And if you're here with me, great. I'm recording it no matter what, and we're going to post this for you. You can email me. I'll send you a copy, too. New day, white band crossed way over here after a relatively steep down move. This is sort of, again, this spikiness. When was this? This was 8-9. So this was a few weeks back. I remember this period. Just for some reason, the market just really was acting this way. Nothing you can do except defend yourself. This is a little bit, this looks, because of this counter channel, you would have looked after the opening for a second level move. Why? Because the dynamic trend band has crossed over, number one has crossed over number two in the dynamic trend band. So now you're going to go try to take advantage of a second level move because of this counter one. Here's a fat channel. Well, what does the rule tell you then? Oh boy, avoid fat channels. Try to buy a pullback to the dynamic trend band. Well, there it is right there. Again, spikiness, but there is a pullback right here to the dynamic trend band, which is steep. This one's turning steep, and you would have shot up there. This one didn't happen. Too fast. Just shot to the downside. Second level move here. If you decided that was going to be what you wanted to do, would have gotten stopped out. This one here, fat channel on spikes. Notice here, different color channel. Now you can see all this in advance of the choppy market. Red, green, new trade channel, red coming down, green spiking up, gray spiking down. Right there, it's like the market's talking to you using Boomerang. I've built so much accuracy into this trade signal line, which is what colors the candles, that it's just speaking to you and saying, forget it. Gray, green, red, all three in a row. Market's crazy right there. What does it do? It spikes up, and you say, well, got a white line crossing over the dynamic trend. Yeah, but use a little common sense. This is a fat channel, and it's not what you want to trade. Here comes the white line down again. Now you got dynamic trend bands matching. Dynamic trend band number two has not, one is not crossed over two, but is traded right along with it. Now you get a trade to the signal line. There you go. That's a smooth trade. Here's a common second level trade here. Look at this. Let's see. Technically, because of all this is a third level trade here. So you probably wouldn't have taken that. If you did, it was a winner. White line crossover dynamic trend band after a huge move to the downside. Watch for the spread to tighten up here, and right here, spread's nice and tight. Buy a signal to pull back, up they go. So you can see, I'm not making this up. These trades pan out very, very well. Look at that. The white line comes right down to the rim of a steep dynamic trend band, but doesn't even cross it. That's how accurate and precision this is. See, that's what I demand when I'm trading. I'm always asking myself, how can I get this more accurate? How can I make this trade more precision? Like that, you see? Anyway, pull back a signal line, dynamic trend band. Would you have taken this trade? You could have. New trade channel opens, pull back here to the signal line, 23.75, runs up to 26.50. Misses our 3-point move. You know, generally, I mean, this is just common sense to me. If you have a huge extended move like that, then a reflex pullback that doesn't cross over, then a new up channel, you probably don't want to take that because it's already spent a lot of its energy doing this. Wait for a counter move, and there we go. White line cross a trade, the dynamic trend band. The dynamic trend band, number 1, is crossing right here. So that tells you as long as this number 1 is on the same side of the trade you want to take, on the same side of number 2, you can just trade that pullback signal line. It's already confirmed. 23 came down to 17.75. I know, it's a little tedious here. We're now on 8.12. Now this setup shows 7.29. Is that right? Oh, my thing's not reading correctly. Anyway, I'll just go through these with you again. Same thing. White line crosses over. This was an early pre-market move. This is not, market's opening right here. Everything, the dynamic trend bands are matching by a trade back to the pull back to the signal line. Up they go. Extended move, radical extended move. Expect some choppiness. All I see here still is just buy channels, so there's no selling, no counter reversing. And as far as taking a second channel, we had this one technically in pre-market was channel 1. This was a second level move here, so no 3 and 4. It's actually 3, 4, and 5 here, but they're little fat channels. We're not taking them anyway because the rules don't take level 3. Things flatten here, pull back to the signal line, 21.5, came down to 19. Didn't make it. However, this is important. You got your right setup. You got short at 21 or 21.5. It came down to 19 installed, 2 points. And then you get a green candle. That tells back to where you got in. That right away should tell you, uh-oh, something's wrong. The next candle is higher at 22. Just get out of the trade. Or if you're bound and determined, you can get out and take the stop, but you might as well just jump out. This deal is not panning out right. We don't have a white line crossing over here, so we're not going to take a buy signal here. One could say, well, is this a trade here? 25.75 ran 29.50. Yeah, this all happened pretty quick. The odds are that might not have been able to get you in. Another one of these spiky days. First move, we get the white line crossing. Everything's blue here. Now, see, remember, one of the rules is you have to have the same color dynamic trend band number 1. These are just the same rules I went over with you here. Just want you to know, if you want to be a surgeon, you got to learn a lot of rules. Boomerang Day Trader, you only have to learn 3. Look for the white line to cross the dynamic trend band 2. The dynamic trend band number 1 must be the same matching color of the trade direction and in close proximity. That one line is all you need to know. Same color, close proximity. In this case, NASDAQ 2.5 points. So the dynamic trend band, although it's cruising along, you can see it's the same color. It only changes right here, and that gives us a change in a new sell channel, which is the side we want to be on because the white line is crossed over, right? Trade to the signal line, boom, down they go. What's wrong with this one? Steep line, the white line's crossing over here. Look at the spread, 23, 19. I know it's long and I know it's tedious, but I'm trying to really drill these rules into you by going back and forth so that you can understand them. Winning trade here, late trade, pre-market. Here's an example of a pre-market strong move to the downside. The market opens, springs back. The white line, again, this is Boomerang's extreme accuracy. Notice how the white line does not cross the dynamic trend band. So that tells you to go ahead and take the second level trade. And down they go. Line gets steep. Do you notice, are you noticing this, you guys? It's the same old routine, and we want that. You want the same old boring routine, meaning the rules and everything are really reliable, the same old thing, so that you look at it and you go, oh, I own this one. I know exactly what to do. You don't want it to be crazy and different every day and, oh, what do I do here? All this you're trying to figure out. You're looking at a list of 20 rules and you're trying to figure out which one is this. It's not like that with Boomerang. Level 1, this never happens. Pull back sig line, second level move. Same thing here. Really steep line, but we don't take third level trades. As you get good, trust me, you will find out how to catch these runners. Remember what I said when the dynamic trend band crosses the red line, like right here? Expect a runner. Look at that. So I have rules to catch runners, but when I went, and this is what I did, is I went and put all this together and I said, what would a month of signals be just taking a 3-point scalp, 2.5-point stop, a painless small scalp, using the 4.5. You know, I ask myself questions all the time when you're trading, and that's what you do. Ask yourself really positive, winning questions. And when I totaled up everything, and I went back and did several other months, which I haven't posted, I went, it's consistent as anything, and they're huge results. So that's what you want to get. Make your life simple and just get consistent, huge results. Anyway, white line crosses here. We're waiting for this to flatten out. How do we do that? Well, first thing we got to do is watch for a change in the dynamic trend band number 1 in the spread to tighten, which is right here. That coincides with the new buy channel opening up, a pullback signal line, and up they go. Now I want to mention again, and for those who are older Boomerang users, stuff like that, you notice I have not mentioned anything about the bias indicators practically this whole webinar. The dynamic trend bands does it all for you, following these simple rules. Pullback, second level, pullback. What's wrong with this? Why wouldn't you, this white line cross here, why wouldn't you take in this here? This line's too steep. It's a large, steep line here. Just put your cursor up there and you can see. Flat line looks more like this. See that? Flattening looks more like this. Anyway, had you taken it, you got stopped out. And you wouldn't have gotten in a third level trade because we don't take those. So 2 winners and a stop out. That's to be expected. Here's another one now. Still steep. Red's crossing, but what do you have here is an extremely tight stop. So you trade a short here. You're going to try to catch a reversal. 36 goes down to 33.5. Didn't quite make it. What happens? A spike green candle in your face. What a bummer. You're short at 35, 36, right? Spike green candle at 38. You're out of the trade. Or you might have just, the speed would have taken you out. You got stopped out. Up they go again. Spread is too wide. Just forget all this. Do I want to get short here? You can. Well, no. Let's see. Dynamic trend band is under number 2. Wait for the color bar change. 40 quarter runs down to 36.75. Barely ekes out 3 points there. Fast, very fast, 3 points. Getting into the last hour here. It's been a rough day, clearly, but I'm just showing you the trades according to the rules. Fat channel, look for a pullback to the dynamic trend band when they're both matching color, which they are in a bullish buy channel. Getting long at 42.5, surviving 41 quarter pullback, and 42.5 runs 47.75. Late hour trades, not recommended, but you can do them. Everything's matching here. Close proximity, tight spread, pullback sig line, down they go. Oh, this is a real doozy here. Opening here, 6:30. This pretty much got missed because it's already in progress from a spiky, but this spikiness here would have had you do great caution, especially this kind of stuff here. Yeah, you could have traded a pullback to the dynamic trend band, but It's a higher risk trade here. This one, same thing. The got started too earlier to the downside. There was no pullback signal line, no trade. Counter spikes forming a fat channel. Nothing to do here. If you had bought on the idea that it's a spike channel, it's up over here, everything's bullish. I'm going to buy a pullback to the dynamic trend band, 1 or 2, which would have been somewhere around 38 and a quarter to 37.75, let's say 38.50. They would have spiked them up in your favor for 3-point gain. Not a pleasant trade, but it would have panned out. That's the markets for you. White line crosses red. Everything's tight and matching. Pull back to the signal line, 37 down to 31. You notice how these rules, I developed these over years of doing this. That's why they're so good. Fat channel. That's why I call it a fat channel, because you look at it and you go, you can call it wide or whatever. It's a fat channel. That's a thin, nice, trendy channel, right? That's a thin channel, which is because of the spikiness, it's creating a real thin channel, and that's a fat channel, and they're created on Boomerang, not on any other system, but on Boomerang they're created by spiky candles that go boom, 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 flying up, and then they fatten out that channel. And if you want to be long, you think being long is the way to go, then you just buy a trade to the dynamic trend band. Had you done that, well, you wouldn't, because by the time they got back down to the red line of dynamic trend band, the candles were red. So you'd have been really questioning, and you got a bias accelerated alert. I haven't talked about these, but this is one of the special features of Boomerang that lets you know when a stronger move is pending. You can see it here, here. They're all over the place. They show up in chart patterns. They're very, very valuable and exclusive part of Boomerang Day Trader. So this one was a winner here. Crossover here. White line is crossing, very spiky, but we're waiting for this to flatten out. Remember that. There's two ways. First of all, you look for the change in the dynamic trend band number 1 for to flatten, and obviously in the case of buying, turning up. You can also watch for the red line rim of the trade channel. We always talk about the white line crossing. Well, you can also watch for the red line, because then you got that whole channel configuration crossing over a dynamic trend band, and that says, in most cases, bullish. That means the trend channel is moving over there. Pull back, because there's a fat channel here on a spiky end of downside move. Try to trade to the red line or the dynamic trend band. Just get a better price than up here. You see that 30.5? And here's a trend band at 28.25, or the red line at 29.25. But just get a better price, and that'll help you on the way up to your 3 points. And this is also why we take 3 points. Say you thought, oh, I'm smart. I think this is going to be a runner to the upside because I see bias accelerator and I see this, and you start speculating a little rather than following my exact rules. I'm just here to make us all a lot of money. That's all I care about. If you make a lot of money, then my reputation goes up, and I'm happy about that, and that's the way it goes. Yeah, I'll sell some more boomerangs, but it's just part-time for me. My main work, as I told you, is managing my own money and hedge fund and all that stuff. It consumes me. I'm up on the London Exchange a lot of times till 3, 4 in the morning, a couple hours of sleep watching the opening. It's just what I do. I've been doing it for 23 some years. So you bought this pullback here and you said, well, I think I'm going to get a runner here. Just give you an example. This is a classic example why we take 3 points and pocket the money and just wait for the next one. So you're real smart and correct. You bought them here right on this red line around 329. You said, I feel pretty good about this. They hit the dynamic trend band, 28.25, and shot up and gave you your 3 points, right? And you go, no, I'm holding for a runner. Well, look at all this. Yeah, they went to 34.50, but then came all the way back down to your entry. Ugh. And how do you know they're not going to just completely reverse and give you a loss? After you had your 3 points, you had your $240 in your pocket. Now, if you bigger traders, come on, you know what to do. Trade 8 contracts. Trade 12. I know what that's like. You guys know. I mean, $240. This is just for a guy with a small account. You get good at this, you can do 20 contracts. You can imagine the kind of gains you're going to have. And you held through this, but you went all the way back rather than taking your profits. There's a lot of agitation here. And you go, okay, well, second level trade. Well, our second level trade process and the rules were all kept into place. Same thing here, though. See that fat channel? So you'd have bought a pullback to the dynamic trend band or the red line around 33.75, and you got your spiky move up to 39. Congratulations. System works, doesn't it? But that's a lot. That to me is like a headache. I know I made my money, and I was a brave soldier, and I fought it through, but man, I might have had to take a break after that, and if I did, I would have missed this real smooth trade. White line crosses. What's the spread here? 35, 37.25. Right here at the signal line, you take them. The spread's fine. Or if you perceive that spread was not tight enough, then you take them right here. Boom. Now, I love those. Now, see, I hate these, even though they win. Boy, do I love these. You get short right here. Oh, thank you. And then, or you get short here, and then, wow. I mean, sometimes, we have our stops and gains preset, as I showed you earlier. I'll show you that again. You preset them here by creating a custom plus 12 ticks, minus 10. This is how I put them on. This one's minus 10 plus 12. Oh, yeah. Or no, minus 12. It's different. But I'm saying you just change these, can set them up any way you want. But the idea is when you click buy at the market or sell to market, it's going to put brackets right in there for your stop and your 3-point gain. You don't have to do any more work, but just sit there and let the trade pan out. And your job, like that surgeon, is to follow the rules and detect any emergencies in that patient's problems, their analysis, that your operation's going smooth. That's the goal. We're getting close here because I know I've ran way over and I had that early glitch. I apologize for that. There's a winning trade. Let's speed this up here. I'm just trying to demonstrate to you and to everyone who looks that I'm honest. I'm showing you the system almost trade by trade. It's a lot of work, and I'm showing you that these rules work. You can have a copy of the rules. You can go through these charts, which will be posted. You can go through them really slow or fast. I'm not zipping through these charts and trying to snow anybody or confuse anybody. This system works. I developed it from many years of trading in the market, and you can benefit greatly from my research at a very low cost. We're not gouging people for $4,000 and all these complicated names and, oh, buy this system, then add this system, then add that one, and net total is $7,500. You don't need, those guys probably don't trade anyway. My guess they don't trade. They're trying to make money off selling you systems. Winning trade, winning trade, winning trade, winning trade. I'm going to have to blow through this a little faster. Steep line, top of the thing, expect whipsaw. This has to flatten out. You know, same old routine, guys. Winning trade after everything flattens out, the dynamic trend band crosses and changes color to favor the trade. Same old routine. Winning trade. White line doesn't cross red. Steep line. Second level trade. Winning trade. Fat channel spike. Wait for a pullback to the red line or somewhere down here. Didn't happen. They spiked higher. You missed out on the trade. No big deal. Look, just without measuring, that's too wide. That trade's going to chop up or down or maybe go your way, but it's too wide. Look, didn't even hand us a entry until way down in a fat channel. It's not a good trade, and it just ran too much from this down to here. Just avoid it. Didn't pan out. Didn't have the right configuration. No big deal. End of the day, I'm going to go faster now. I'll show you I can do it. Winning trade, tricky, but winning trade. Spiky counter trade, winning second level. Steep line here. You might have gotten in this one, but it turned into a fat channel. The white line crossed down here. You might have missed this. If you got in, you got stopped out. Let's call it a stop out. Okay, big deal. Winning trade here counters your stop out you just had. No counter channel, so no second level. Winning trade here. Look at that. Counter channel, new channel, second level, winning trade there. A winning, this was not a counter channel. We don't take third channel entries. End of a long stretch. What do you expect? Choppiness. Don't worry about the first crossover. Flattening dynamic trend band. First, you got to get dynamic trend band number 1 to start turning aqua, blue. That's the first rule. You don't see it. See that there? It's not turning blue. No trade yet. Wait till it turns blue. Pull back to the signal line. Up they go. Second level, successful. See that? New day. Now I'm getting some momentum on the upside here. And the speed. Choppy opening. Don't worry about it. Sometimes the openings are just a lot of guys on the floor. I used to go down there and they call the amateur hour, the first hour. A lot of them wait for the first hour. That first 5, 10, 15 minutes, just generally amateurs fighting each other for whatever reason. They got their own emotional reasons, you know. This one got away from us. Counter channel, very quick counter sell channel, authorizes a second level trade. Up they go, winner there. Steep line, same old routine, no choppy. See why trading against that without the right configuration, it's all choppiness. This saved you from it. Why? Even with the crossover here on the dynamic trend line, this is too steep. Got to wait. And sure enough, they reacted by moving up to the upside. So what did we do? The white line is on this side of the downside of the dynamic trend line. So we're just waiting for it to flatten out. And because the white line and the trade dynamic trend band number 1 is on this side, the lower side of number 2, we're waiting for a sell channel. There it is. Boom. Down they go. See that? Takes all the creepiness out of trying to guess at trades when you just follow these simple rules. Counter channel. Now look at, once again, look at how unbelievable that is. That the white line merged exactly into the dynamic trend band, but did not cross it. It was a counter trend, so you can look for a second level move. There it is, and right when it forms, look at that piece of cake. It's in and out real quick. Now here's a crossover. We got fooled on this one. Here's a crossover. I don't know what this dynamic trend band looked at that point, but because it was a long, very extended move, you might have been skeptical about this. If you got in, then you got stopped out. That's no big deal. But this was pretty steep, and it just was, you know, you had up and then a counter sell. It was not a very good trade to get into. But if you got in, got stopped out, big deal, because why? You're back short here, 87.25, and you made it back up plus a couple of more ticks. And then what? Well, this is too late. This is third and fourth level moves. They occur sometimes into the close. Big down day on NASDAQ and the whole U.S. stock indexes. Winning trade here. Both lines here are bullish, so there's no short here. They have to match. Turns bearish here. Pull back to the signal line at 79.25. And down they come to 74.75. You see that? We had to wait until this changed. And it'll change in the blink of an eye. I mean, you'll see it blinking and changing. Then you can hit that pullback to signal line. It's all alarmed and dotted right on the line. If that dot's there, it hit the signal line. You're going to be looking over on the right side here. And you're going to have your finger on the trigger. And you're going to watch for that to merge in the price marker to merge into the signal line. You'll hear the alarm and just boom, sell it to market. Don't worry about slippage and all that. And you don't have to worry about that. I've built that into everything. You'll miss a few ticks, don't worry. White line crosses over. Another good example, fat channel, 3 spikes, boom, boom, straight up. Fat channel, what's the rule? Don't buy the first trade, buy what? What's the rule? Does anybody know? Buy a pullback to either one of the dynamic trend bands or the red line. One of those. Just get one of those. Well, the best trade on this one was a pullback to the red line. If you bought the trade back to dynamic trend band number 2 at 80.5, they would have shot up to 88.75. You see that? Here's your spiky counter trend channel. Pull back to the signal line, second level move. White line crosses red. What's the spread here? 94, 95, very tight spread. This is starting to flatten. The spread's in the right tightness, but what's missing? Anybody know what's missing right here? What's missing from getting short here? The spread's okay. The dynamic trend band is pretty steep, right? I know you're getting tired. Good. Thank you for your answers there. The color of the dynamic trend band number 1 has to match. That occurred right in this candle. So this or this pullback, which you would have hit, you had to be fast. It's fast business. But you would have been rewarded with what? A fast spike to the downside. Then you can take your your $240, stick it in your pocket, and get the hell out of the market, because markets are risky. They're nervous. That's why I don't hold for runners. Get in these trades, pocket your money 5-6 times a day, take the small losses, and be a real trader. That's what real trading is about, is what I'm showing you. This is 23 years of trading. I've caught big runners and all that. They're rare, but you can catch them. But I'm telling you, to me, maybe it's just my view, but real trading is avoiding spiking markets, knowing how to do that, which I've showed you, and pocketing money on nice moves, nice consistent moves. And notice how that 3 points is generally very attainable. When you get on the right side of everything, it happens very quickly, or relatively quickly, so you don't have to go through the struggle and the agony of watching the market move against you. None of us like that. 23 years of trading, I hate it more than ever now. I hated it the first day. I put a trade on and, oh, it spikes against you. I start talking like a drunken sailor on a Friday night. I just it makes you mad. Oh, come on. What are you guys doing? Can't you see it's supposed to be moving on my side of the trade? Anyway, let me move along here. I'm almost done. I'm going to finish up pretty quick here, and we'll just call this our recap. I didn't do every trade like I promised. This is new, brand new, and experimental. And what I'm seeing is that, indeed, it isn't necessarily practical to review every trade of the whole month. It's a little too tedious, not for me, but it's a little boring. And I think you get the general gist. And once you buy Boomerang, which you're going to do, right, you can go through 20, 30 charts yourself. You can go back through a year on Ninja. You got all this loaded. I could go back and post a year of results, but I'm just starting from scratch, I thought maybe I'll go and do July and post that up on the web. I think I'll do that just to kind of build our system a little bit on the blog. But anyway, that's not important. That channel here, oh, this is pre-market. Never mind. Well, just for fun, this is not a trade, but it's pre-market, just so you can see how beautiful the rules work out. The minute you see a steep line, fat channel, counter jump, what is the first thing it tells you? Not emotionally buy, well, the pullback signal line. No. It's a fat channel with 3, 4 spike candles upside. Your mind should immediately recite the rule out loud. Spike candles, fat channel, buy pullback to one of the dynamic trend bands or the red line. Most cases, especially after a big move like this, it's going to be one of the trend bands. Look at that. Pulled right back to dynamic trend band, almost ran the second one, but that was your entry, and up they went. Just learn these rules, say them out loud every day before you start trading, get them drilled down, have them in, I'll send you this form. You can print it out and put it on your desk, have it in big letters and recite it and memorize it. You'll be trading like a champ right away. I believe you will. Some might struggle more than others. Some are more experienced than others. But you're going to get this. And once you start getting it, you're going to say, wow, I'm going to just take it easy on myself, trade the setups that are really obvious and clear that, are within the system. You start seeing fat channel, spike against the fat channel. It's not saying anything other than, you know, take it easy. Maybe this is not where you want to trade. This was the first hour of trading right here. You got 5 more hours. Take it easy. Not, oh, the system wasn't right. Don't worry about that. The system says to avoid spiky whipsaw markets, okay? Well, you got the dynamic trend band under number 2. One is under number 2. The white line is under 2. So that tells you right there the general leaning bias is going to be to the downside. Well, sure enough, they jumped over the dynamic trend band and everything was matching and the spread was right. So had you taken this, you might have got stopped out. If you didn't, obviously you wouldn't, but if you took it, let's say you did, you got stopped out. That's okay. Look what happened. Everything turned red, a new sell channel opened up, you got short, you immediately made, let me just show you, because you see this spike here. I do not hide anything. New channel. This will be alarmed here on this channel, by the way. Everything's matching here. Pull back to the signal line was at 86. Let's say you got 85.50, 87.50. You see, even at 2 ticks worse fill, you survived the stop here. It might have stopped you out if it went a little higher. That's going to happen, but guess what? It didn't, according to the rules. Move to the downside. Big move to the downside, crossover, tells you, wait. This spread has to tighten, and this steep line has to flatten. This is worth it. I know this is a little tedious or boring, especially if you don't own Boomerang, but if you own Boomerang, you're probably hanging on every word I'm showing you because this is your mortgage payment. This is your date with your girlfriend or your wife or your husband or boyfriend next week by following the rules. This is your piling up 10 grand in the bank that you over and beyond your bills. How exciting is that? Because guess what you can do then? Trade more contracts. Get really good at this and trade more contracts. Hey, I'd stay home all weekend and practice on the simulator if I knew I could make $20,000 next month, even though I was a fairly new trader. Okay, so this is starting to flatten and turns blue. This is flattening. We got the white line crossing. Or just be a little patient, and in most cases, trade at a pullback to the red line or a little bit better. In most cases, just don't trade at the sig line. Get a little better fill. And sure enough, the best fill was at the dynamic trend band number 2, which was 73, 73.25 half on number 1, and the red line was at 75.25, and they ran up to 80. So plenty of room to grab 3 points. Don't try to grab 4. Just please follow my instructions. I've already done all the trial and error and the guessing and the wrong stuff. I've already lost the money on the wrong sided stuff for you. You don't have to do it again. Just follow these rules. That's how I develop these systems. I have to personally lose money and go, that was wrong. I feel that pain, and then it helps me to develop these for you. White line crosses here. What's wrong with this? 72.75. Way too big a spread. Don't take this trade. Now, that doesn't mean you take the pullback to this here either. However, if you're monitoring this, you go, oh, that spread's too wide, 73, 76, too wide, and you're waiting for the spread to thin, and you see it thin right here, 72.25, there's a little trick here, 74.25, 2 points thinning spread here, and they jump back. Everything's still red, including dynamic trend band number 2 is already bearish, and this is magenta bearish. Trade them right there at the trend line, or the dynamic trend band number 1. You're waiting for the spread to thin to buy a pullback to signal line, which you could have bought. You know, if you didn't do that and you waited, you could have traded them right here at a pullback to the signal line, still got your 3 points, or you could have tried to grab this here. White line crosses over. Spread here is 65.25, 61.25, 75. What was that again? 65 half, 61, too wide. What's it here? This is right when it's crossing. What is it right here in the first pullback signal line? 62 quarter, 65 quarter, 3-point spread. Still too wide. This, now look here, this changes, this spread here. Now you can visually see it. 65, 63 quarter. Now we're cooking. Pull back to the signal line, and up they go. Now I know that sometimes you see, look at that. That pullback signal line was at 70 and they ran to 77. Sometimes, oh God, you're anxious to get in, but I promise you, if you just wait for these rules, wait for this spread to thin, that'll put that force on the side of your trade. You'll be much better off. Classic thing here, pullback of a contrary sell channel, and then a second level move and a huge move to the upside. Huge move to the upside, straight up. Now here's one where the white line crossed the dynamic trend band. Boy, they just wanted to turn lower right away. Spread was tightening. You got the red rim also of the trade channel crossing over here a little bit early and here. So, you know, you get good at this and you say, well, this is flat enough and this is crossing over here, or you wait for the crossover, pull back, down they go, 3 points. Classic counter move, second level move, huge second level move, gigantic. Oh my God, monster. And somebody's going, why didn't you stay in the trade and catch all that? Well, because that's not the system. However, if you had some intuition that this was going to be a big move, or you had some indicators telling you that, you could have just held. Use the red channel, red line, as your trailing stop. It's very simple. Just use the red line, plus a couple ticks. Look at that. I personally, I catch some of these, but I don't go for them. I don't worry about them because I just follow the system, get my 3 points, and get out. I prefer that. As you get good, look, don't worry about that. Just get real good at trading the existing system. Have a couple of big months, then sit down and formulate a plan. I've got the plans in all our instructions in my day trading course of how to catch the runners. That's already there, but I'm just showing you how this is something I want to publish every month and show traders how to get started without having to waste money and time on those boring trading rooms, and just get into something that'll work out for you right away. Change the dynamic trend band. Spread is thin. Notice how it starts flattening up here. You just put your cursor up there. You see it flattening. Pull back signal line, down they go. It works over and over and over. And it's not, you can tell, I'm not like you're avoiding the stopped out trades. It's really not the case. Someone may argue, oh, well, wasn't that a second level trade here? No. This, according to the rules, I'll read them to you again, and I'll be glad to send you a copy if you're serious. Choppy market conditions start with fast spike candles that are larger than the immediate previous candles. Avoid choppy markets. Also, your ADX might have told you that. Maybe not, because the volume in the ADX might be a little bit slow and letting you know if something's going to start chopping. But the spike candles with what? Counter colors. Green up, spike down, new buy channel, new sell channel with a green candle, then a new buy channel comes in here and a red candle go to the downside. You got to avoid this nonsense. Let the next trade pan out. Well, the next trade crossed over here, formed a fat channel. Notice how the white line did not cross there. Look how precision that is. Here's where it crossed. Now, obviously, this is a second level trade because you see it, fat channel. And by the way, you see how it did pull back to the dynamic trend band and shot up, but that's not a trade. White channel crosses. It's a second level trade because even though we didn't have this counter channel, we do have a new white line crossing, or a brand new white line crossing, or pull back the signal line at 99 quarter, and up they run to 0375. Same thing here, winning trade, second level winning trade, first level winning trade after everything. Well, fat channel, pull back to where? You got it. There's the bottom, right at the dynamic trend band after a fat channel. See, Same old routine. And up they get. You caught the bottom right of that move. Up they went. Same old routine. Steep line here. You might have got stopped out in this one, you know. It's late in the day. Oh, 3 minutes before the market closes. I don't think you want to take that trade. 15 minutes in the last 15 minutes in the futures. Yeah, look at that. A winning trade. I wouldn't take it. I didn't record those, by the way, in these results. I didn't show every single trade up to the last second. I used common sense and pulled some of those out in those last 20 minutes. Winning trade, second level, choppy trade. Well, this one never gave us a pullback to the signal line. Turned into a fat channel. You might have shorted the red line here, which would have been okay, but you got all this counter things. But you get caught in these sometimes. It happens. You go, I'm going to get a second level short. Dynamic trend band is bearish now. Number 2. Number 1 is bearish. I'm going to trade right here at the pull back to the dynamic trend band. Well, this is a fat channel. You would have got that, or you might have gone for the red. Let's say 19. That's it. Say 18 and a quarter to 19 and a quarter. You would have survived the stop if you got the like 19. And then it was just a, choppy mess down to 1550, spiking. You get caught in these. There's nothing you can do. You get short following the rules, and sometimes they're just agitating. I mean, that's nobody's fault. That's welcome to the wonderful world of trading. Checking the time here. Okay, so I think you get the gist. You get the gist now. You can keep looking at other systems and becoming a webinar-aholic, but that isn't going to help you make money. What I showed you today from the very beginning to the very end to the promo you saw, unless you're a Boomerang Day Trader already, was all about making money. That's what this business is for, and I'm telling you, because I know when you get all involved in trading and you start thinking more about indicators and, ooh, that's a cool indicator, and wow, that's a cool indicator, and your mind's a million miles away from, your $2,500 mortgage or whatever is due, or rent on your pad, because you're thinking about some cool indicator. The only value of that supposed cool indicator is that if it can help you to make money tomorrow or later today if the markets are still open. It's only valuable if it works consistently 60 to 70% or better of the time and can put cash in your pocket. That cool system you saw that the guy wants to gouge you for $5,000 on is only valuable if he can prove to you that it really, really, like I've done here today, really, really makes consistent money on all the trade setups, and he shows you the exact rules and demonstrates exactly where the trades would have been made. And hey, if somebody out there does it, I haven't frankly seen any. I'm sorry, I haven't seen any. Hey, if some developer hears this, give me an email, shoot me an email and show me that you're done. But I haven't seen it in 10 years. I'm one of the only ones that I know of that's showing exact setups in their relation to the stops and the gains in the trade. But go ahead and show me that. And what's my reaction? I'm going to congratulate you, because that's the way it should be in this business. There's enough frauds in this business and enough guys who don't trade, who've never traded successfully, but they're building systems and trying to sell them to you. So I'm just trying to let you know, you can buy Boomerang and start making money, and I will help you as much as possible to make money with my webinars and video tutorials, or you can keep shopping. Either way, we wish you well, and I certainly thank you for joining with me today. It's been fun. I know it's been a little more one of these harder work type days, but that's what we were trying to do today. This was not a sales presentation seminar or one where I go through all the indicators and show you all the intricate details of Boomerang. We've kind of revolutionized ourselves past that now by just following these simple rules and putting money in our pocket constantly. If you're serious, and I show the rules here on the charts, and it's exactly what we went over today, very, very simple rules. Trading is not easy. Trading is extremely high risk. and I want you to be very aware of that, and I want you once again to be aware that these trade setups I showed you today were hypothetical trade setups, but done exactly according to rules. The charts don't lie. You saw that when we got stopped out, we got stopped out. Most of the time, we didn't. Indeed, according to the records, 81% of the time we didn't. So those are good odds, simple rules. That's all you need. I would love it if you'd buy Boomerang and join our family of over 1,000 Boomerang traders, and I will do everything I can to help you become a success. If you're highly sincere and would like to copy these rules, go ahead and email me at mohan@daytradersaction.com, and I'll be glad to send it to you. The Boomerang traders that I have on record, and it may not be all of them, I will send you a copy of this later today. So, thank you for joining with us today, and I appreciate very much. All the best of success.